All right, all right. Little technical difficulties getting started today, but we're back. We're here. Seems to be working, so we can get started. All right, glad to see everybody here first thing in the morning, ready to join me and go through and see what the markets are doing. And they're up. They're up today. Everything's up. So, is it going to stay up? That's the question. How strong is that Viagra that it took today? Is it going to be able to keep it up? All right. This may be the turnaround point, or it may not be. We'll go take a look at some of the markets and see how long it's going to go. But this is the lab for our university class. We are talking about options. And last week we put on a bunch of straddles. I think they were straddles and strangles. I don't know if we put on any straddles, strangles. I think they were all strangles. Maybe they're straddles. I don't know. Straddles, strangles. They're such a confusing thing. What's the difference between a straddle and a strangle? Oh, you guys have heard this before. It's my pet peeve, right? Straddle means that it should have your 1 foot on this side of the ditch and 1 foot on this side of the ditch, but it doesn't. In the financial world, straddle means they're on top of each other. All right. So if we put them on top of each other, that's a strangle. And then if it's a straddle, like you would think it would be a straddle, they're on top of each other. Strangle would be out here like this, one on each side. So whoever did that back in the very early days of options got it backwards. And that's how you know which way it is, because it's backwards. All right. It's wrong. So we have to just deal with it. We could change it in our own little world and say, hey, this is a straddle and this is a strangle, or this is a strangle and this is a straddle. We'd call it whatever we want, right? I make up names for things all the time. But if you ever want to sound like you know what you're talking about, I guess you better know what the difference is between a straddle and a strangle. And a straddle is a strangle, and a strangle is a straddle. So there you go. That's how you know the difference. And I think we put on a whole bunch of straddles. And like I've always said, that if you're going to learn how to do some of these option strategies, rather than just putting on one and waiting, 6 weeks to see how it turns out, put on 10 or 15 or 20 of them. And then you don't have to, then you wait that 6 weeks. It's like on steroids 10 times. So that's what we've done here. And you can see we're currently up $870 in our portfolio, but we have a couple of them that are down, not moving. So these markets are not popping hard enough for us to outperform the time decay. And that's what's happening here. So we can come in and take a look and see where we're at. We've also got orders to just take them off. And do we have any that's made enough money to take it off? No. None of them made enough money to take off their positions. I think we took them all off at 25% profit. Once they hit 25% profit, it'll take them off. And that's how we'll know that it hit 25% because, well, there won't be any more orders on there. Tesla popping really hard today. And of course, I'm telling you, I've told you 100 times, these big banks and hedge funds, they take advantage of the fundamental nature of the markets to drive their strategies to where they want them. And then once they get a whole bunch, or they'll go through an accumulation stage. Once they get all the stocks they want, then they'll run them back up. They don't care. They don't care if they're going to take advantage of Elon getting his hiney handed to him by the Democrats because they don't like him saving money for the government. Who wants that, right? So they take advantage of that. They'll load up because they know it's a good company. It's going to turn around. It's going to go back up. And we talked about that already. So here it is. We got a big pop today, right? Hit those blue lights, just like a train on rails. I mean, you couldn't, you're like, oh, this is all driven by, what's going on out in the economy and people are all mad. No, look at the mathematical models. Look at the mathematical models on this thing. I mean, that blue light was right there, ready to intercept. Bang, away it went. So you think that you got to just realize most of the money that's being traded in these markets is being traded by computers. And when the mathematical models hit the numbers that they want, they buy, regardless of whether the Democrats are blowing up Teslas or not. If the mathematical models hit their numbers, they start to buy. And it's just a computerized system. They just play the odds, just like going down to Vegas and sitting down at the roulette wheel. You know, along the way, there's going to be winners all along the way, right? People play the roulette wheel and they win, 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 win. But for the most part, everybody loses, and the casino is the one who gets to keep all the money. So it's just the way they do it. It's how it works. Now, I have to start off with a very serious and sad situation. All right. Very serious and sad situation. Before that happens, so I got to take another drink. Hold on. I got to get my voice back already. All right. What's the very sad and sad situation? The very sad situation is that there are intimidators. Intimidators? What's that word I'm looking for? Not intimidators. There's people trying to pretend like they're me. All right. Don't fall for it. I'm not going to contact you via TikTok or Facebook or some other program or text messaging you. I'm not going to contact you and say, let's invest together. Send me your money. I got some great opportunities. Let's do this. I got a text message from one of our students, and I'm glad she had my phone number. She'd been in my class at the university, and these scammers contacted her and said, "Hey, it's Lan Turner, and go to my TikTok page." And you go to my TikTok page, there it is. There's my picture. There's my name. Now it's not the same name I've got on my TikTok channel. It's got a little, underscore at the end, so it looks just a little bit different. And then they've gone and they've taken all my videos, they've downloaded them, they've captured them, they put them all on their site. And if you notice, there's only like 5 people following them, but it looks like my site. It's got my name, it's got my picture, it's got everything all about me, it's got all my videos, and then it's coming from me, and you're saying, "Hey, I found Lan Turner and I'm following Lan Turner on TikTok, and now he's trying to get me to send him money to go invest with." Don't do that. Don't fall for that scam. All right. I've been saying this before, but I got investors out there who have fallen for this scam from Facebook. I've got my niece fell for it, lost $2,000. My nephew fell for it. My own family falls for it. So don't fall for it. There's scammers out there, and they're pretending to be me. Intimidators, imitators. There we go, Bruce. It's too early in the morning for this kind of stuff. All right. All right. Imitators, not intimidators. There we go. All right. So please don't fall for the scams, guys. I'm not going to ask you to send me money. And the only time I'm going to ask you to send me money is Pet News Magazine. I'm going to ask you to subscribe to Pet News Magazine. I'm never going to ask you to give me money to invest. All right. That's not going to happen. All right. How come this stupid program changed and I can't get rid of this? Look, I get rid of it and then it won't put this back up. It used to do that. That's the dumbest thing in the world. All right, I don't know. I have to design all the software nowadays. All right, here we go. Back to business. Please don't fall for the scammers and the imitators and the imitators, the intimidators. All right, so I want to go through today, and I also want to go through and look at before we get started on our options, because I do want to talk about the Black and Scholes model, and I want to go through the options chains, and I want to show how to read the options chains. And the reason we're going to do that in class today is because this is the lab for the university class, and that's what we talked about last week. And I want to go through and cover that with you again, and then apply this to the markets and see if we can't find some other markets to put some trades on. We may just take all these off because these were just, well, they're fun to have on. They're making money. So we might find some other markets to put some things on, but we might take these off and then just put on different ones. But I want to go through the tables. We'll talk about the Black and Scholes model and how important that is. And then we're going to go through and look at the charts. Everything's popping today, so that's fun to see. And we'll look at our opportunities here in these markets. And then what's going on with how come we're losing money on this one? I don't know. We'll come and look at it later. All right. The thing that I want to do now first, though, is I want to go look at the news. Let's go look at the news. All right. So we're going to pull up the trading economics calendar, and we're going to go to Impact 2 for today. How come I'm getting an ad? That's weird. All right. Impact 2. There we go. And Monday, March 24th, and Chicago Fed National Index. None of these are big impacts, are they? They're none of them red. We don't have anything red until down on Wednesday. So Fed Bostic speaks today at 10:45 and Barr speaks today at 10:12. So we'll see what they have to say. Maybe something positive. And anytime the Fed speaks, you got to look at the morning session before they speak or the time before they speak, because people know what they're going to say, right? I mean, the people who have the inside knowledge, know what they're going to say. So since the market is all moving higher, maybe the Fed's going to say something positive. That's kind of the way I look at it. There's always insiders, whether you believe it or not. I know everybody in this world perfectly honest, and they would never do anything illegal or dishonest. But if you're in that camp, then continue believing that, because you know what? Your life will be a lot nicer than to think that everybody is liars, scammers, and everything is everything is manipulated. Well, I guess we're finding that out with Elon Musk, aren't we? He says the whole federal government says it's like walking into a room and there's targets, floor, wall, and ceiling. Doesn't matter where you shoot, everything is one great big scam. So if you still believe that the financial markets are not manipulated, then you keep believing that. And that nobody would actually trade the markets with insider knowledge or information. Nancy Pelosi. All right, let's go ahead. And there was nothing really on the news front other than the Fed. So let's get started here with our UBI. Let's go look at our UBI portfolio. I want to check and see. I think we might have some dividends that came in that we get to add to our portfolio. If not, it's good to check, right? Let's go check and see. My goodness, my voice is going away. Okay, so here we go. This is our universal basic income portfolio. And you can see that what we've got in here, we got $50,000 invested in YMAG. Now, YMAG is the Magnificent Seven. All right. So what's the Magnificent Seven? Well, YMAG is the dividend version of MAGS. So let's pull up MAGS, MAGS. This is the Magnificent Seven. And look, it's popping today right on those blue lights, right there, just like a train on rails. And so you can see that we're coming in here, and the mathematical model said buy, so it did. And that's what they did. Now, how far is it going to go? Nobody knows. That's why we use the probabilities, right? And we're trying to reverse engineer what these guys are thinking with their computers and what their computers are going to do. But normally speaking, we know that they have a tendency to do 3 drives up, 2 drives down. Now, we've got our 2 drives down. If we come in here on MAGS, Magnificent Seven, all right? So it's got Apple, Amazon, Netflix, Google, not Netflix. Sorry, that's FANG. MAGS is Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla, and then I add PLTR, but it's not actually in the MAGS. So to me, it's a MAGS 7. It's actually the Magnificent 8. All right, so this one here is X1SA2. So that means that this one up here is X1S, X1S, A1. A1. This is A1 here too, sorry. It's too early in the morning to be counting all the way to 2, counting all the way to 3. Okay, X1SA1. This is X1SA, X1, no, it's X2. There's the X2. This is X1SA1. This is X2SA1. So we have basically a 50-50 chance, is kind of the way you can read that. We have kind of a 50-50 chance that market's going to continue higher. This one, you have like a 25% chance, and it usually fails. That's why we don't like to go in on X1SA1s. But what's funny is you're going to come and see some of these markets have XSA1s, like Palantir, for example. Well, here's Amazon. Amazon has an X1SA1. That's a low probability that thing's going to continue. Doesn't mean it can't. Can. It's 25% probability that's going to go up without coming up and making another low before it does. is going to probably come down and break another low. This is my concern with this false break. It might be a false breakout. Might not be. We don't know, right? If you come to the S&P 500, it's an X1SA1, and it's only got basically a 25% chance that that thing's going to continue higher without turning around and flushing back down and breaking this low right here. And that's what that's all about. So you have this low right here, and the chances of the market staying up there is only like 25%. Now you come over and look at some of the individual stocks, like this one here is kind of, I don't know how to count this one, because this one here had almost a complete reset, making this an X1SA1 again. But if you have to count this little, whatever happened here, this little ABC pattern in there, so you wanted to call this in the top, right? You want to call that the top. And so if that's the top, and this is the second drive high, that second drive down, then this is an X2SA1, which means you basically have a 50-50 chance this thing's going to rise, which is pretty good. We'll usually put money on a 50-50 chance. Start dollar cost averaging in at this point. And that's Apple. Now we got an order in here. This order is actually it's a straddle. So we put 2 orders in. We didn't care whether it went up or down, right? We just wanted to go one direction or the other. And we're down $27. So if you come and look down here in the positions, look at this. I'll show you. One is up 320 and the other is down 347. So you're at 27.50. You're like, man, that's not doing any good. You're up 320 and you're down 3. We could have been at $320 if we'd have just bought the long side. That's correct. You could have been. Did you know it was going to go up, though? My goodness sakes. Hold on a second. Even my hot tea's not helping my voice this morning. Well, you guys get allergies? Man alive, this spring has been crazy for me. Me and my wife both. Really suffering from the allergies this year, the springtime. All right, so we're back. We're back here. What were we talking about? I was going to show you down here in the bottom window. We're up 327 on the long call, and we're down 352 on the short put. Now remember, the short put could only lose, the max it can lose is $1,400. The long position, which is up 325, has unlimited profit potential. So all it has to do is outperform the short position. And if it keeps going, eventually, sometimes this thing will just pop up and you'll get a big number like this one here, like Tesla. We got the same thing here, right? I mean, we're up $767. You're like, wow, that's great. But the long call is up $1,700. The long put is down $985. But because the long is outperforming the short, you're up $765. So we said we were going to take this off at 25% profit. So I mean, we could go in there and take it off right now, $800. That's pretty good. Just go in there and pop it off and say, well, we made $800 overnight. That's a nice little deal. We can take that and spend it. Or we could wait and see if it wants to continue to run and try and get our 25% out of it. We've got 144 days on this thing. So, you could stay in there longer and try and get your 25%, or you could say, this is close enough. I just want to take $800. And we may do that. Overall, if we look at all of them, let's look at all of them. See, all of them, we're up $690 on all of them. So if we just hit liquidate all, we'd be up about $600 because we probably have to pay a little bit of a spread to go through. Some of these are up, Tesla's up 700, but the losers down here are taken away. There we got this 260, which is the SPY, which is not doing too well. Actually, if you look at the SPY, the thing's down 264. The long position is up 2,000, but the short position is down 3,000. The long position on this one is up 2,000, and the short position is down 1,400. So overall, we're down $265. It's crazy, huh? How that works, but that's how it works. That's how it works. All right. So we just let those play through. They've got orders on them to take them off when they hit 25% profit. NVIDIA, trying to pop here a little bit. What is NVIDIA? Well, this is the high, and it didn't break those blue lights, so this is a little bit easier to count. It had this little ABC top formation, but that's right there. It's an X1S A1. And again, you only have a 25% chance that's going to turn and make money on an X1S A1. And it did exactly what we expected, right? Boom, boom, flushed again. Now, this is the one. This is the X2S A1. X2S/A1. So this X2S A1, and that is where we're sitting here on NVIDIA. So this is where I'll start putting money in. Now, I'm not putting money directly into NVIDIA unless I have some sitting on the sidelines that I kind of want to play with. I put it into NVDY, right? NVDY. That's where I put my money. And I actually put some in this morning. But I put it in based on the fact that NVDA is at an X2SA1. I put a little bit of money in there just in case it wants to start to rally from here. But it's only got a 50-50 chance, roughly, right? It's like sitting on a 17 at our blackjack table. And now if this thing turns and flushes and comes down one more time, then I'll have an X3SA1 down here, which is like a 75% chance that the market's going to turn and rally from that point. So at that point, I would probably go in a little bit more even, and I like to put it into NVDY. And then this is going to give me the dividends. And then I'll take the dividends after I build this market up, and I can decide what I want to do with them. And oftentimes what I've been doing is doing pairs trading. There's an article in Pit News Magazine, I think, this last month on pairs trading, and where I'll take the money or the dividends from NVDY that come out of here and put them into NVDA. And then I can have some growth stock as well as some dividend stock, and I have pairs trading. It's called pairs trading. And I pair those two together. So this is the growth version, and this is the dividend version. So I always put my money into the dividend version first, then take the dividends and buy the growth version. That's what I've been doing, and it's been working pretty darn good. All right. So let's come back over here and look and see what our portfolio's been doing. So getting a little sidelined. Here we go. All right. So we got our money. This is our YouTube channel version. And we got $50,000 in YMAG. We talked about what YMAG is, and that's why we have that money in there. The yield on it's a little bit lower, which is fine. Don't freak out. Oh, Lan, you don't have 140 yield. Why have you even got any money in there? Well, because it's not nearly as scary, right? It's not going to move as much. It's not going to be as volatile. So you don't want to have all your money in the really high volatile ones because scary to be volatile, right? So we like to calm it down a little bit, and that's why a little bit of money's in YMAG. So I'll take money from some of these higher yield ones if we got some money in some higher yield ones, and then take that money and sometimes put it up into the less aggressive ones. All right. And it's a little bit safer place to put it. Not that anything we're doing here is safe, right? You can lose money in all these markets, but it's just the way you kind of work through them, figure them out, stick with it. This is a little bit more longer term investing, this type of stuff that we're doing here. All right. We're not just jumping in and out of the market all the time. All right. So now we're going to come in here, and we started trading in this one on January 1st. We put $50,000 in there. So far, we've received $3,486 or 7%. So we're up 7% on our $50,000, $3,400. So we're going to come over here, and they're going to have us back to break even, according to this calculation, around 2.8 years. Months, we're going to have 33 months. In 2.8 years, they will have given us our entire 50,000 back, and we will be back to a cash cow. All right. And that's really what we want to calculate here. When we get these high yield dividend paying stocks, we put our money in there. And the first thing we want to know is how long is it going to take before they get me all my money back. And in this case, on YMAG, it's 2.8 years. Now, if you come down here to Tesla, we put $50,000 into Tesla, and I think we added a little bit more. Is that why it's more than 50,000? Yeah, we put $4,500 in there. We started with 50,000 in Tesla, and we put 4,500. Now, let's go see if we got any more dividends that came in. We might have some dividends that came in. And if we do, we can put that money back in. All right. We can put it back into Tesla. And because Tesla's on the rise, right? Hit the mathematical models, X1S, X2, SA1. So we're going to come over here and we're going to go to, where have we got to go? We got to go to here to get our dividends. So this is where we get our dividends. So we go to FinViz. That's my favorite place to get the dividends. There's lots of places you can go to get dividends. You can go to Google. You can go to Yahoo. You can go to those are the two I know of: Google Finance and Yahoo Finance. But I like FinViz. FinViz is more graphical. It's easier to read. I can just come in here and type in TSLY. Pulls up the TSLY chart, and then these little blue dots down here tell you the dividends. All right, so there's our dividend right there. So we got a dividend payment. It was 46 cents, which is not very good because, these dividends go up and down based on the success of the trading of the options that this company trades on the underlying stock, which is Tesla in this case, and their options haven't been doing very well. So they didn't pay very good, only 0.46. If you look back here a little bit further, 0.57. And then this one here, 71 cents per share. Now back here, it was $1.28 a share. And look at this. This was $1.12 a share, plus they gave you a bonus of 9 cents. So that was cool. And then in here, they had 55 cents with a bonus of 4 cents, 4.5 cents a share. Back here, they give you $1 a share, and they give you an 8-cent bonus. And in here, they give you 75 cents a share with a 6.5 cent bonus. And then they give you 8. I love it when you get bonuses. That means they're doing well. If you get that little special right there, that's a bonus saying, hey, we really did good. We made extra money over and above what we planned on. And so we're not only giving you the dividends that you expected, we're going to give you a little bonus. All right. So they've been giving bonuses on this one a lot. They give you 92 cents a share and then a 7-cent bonus. And they give you 59 cents a share and a 4-cent bonus. That's pretty cool. So now we're back here and we've not been getting bonuses because the market's been going straight down. They give you a bonus here. Oh, look, they give you a 0 and then a $1.28 bonus. That was weird. That's kind of weird how they did that one. Why they do that, I don't know. We could do a little research and find out, but that's just how they did it. So now it comes through here, and this is the amount that they're giving you, 46 cents, and no bonus. And obviously, you wouldn't expect much of a bonus when the market's coming straight down. This is a long strategy. I mean, we're making money when the market goes up, and when the market's coming down, at least they're still giving you bonuses. I mean, they're still giving you dividends, right? Just not very big. They're going down. So no surprise that our dividends are getting smaller and that there's no bonuses. All right. So 46 cents is all we get, 0.464. So let's come and put that into our calculator. We have to do the calculations here. If we have our real money account, we don't have to do the calculations because they do that for you in your account. But we're going to do it here for the YouTube channel, 0.464. So that's how many dividends they're giving us. So that's per share. They're going to give you 46.5 cents per share. They don't care how much you paid for the shares. The only thing they know is that you have how many shares, and let's see how many shares we have. I'm going to come over here, slide over here, land. Where's your shares? We have in here. Oh, I did Tesla, didn't I? Oh, let's do Tesla first then. All right, Tesla. We have 3,531 shares with our $54,000. So we're going to take 46.4 cents. And we're going to multiply that by the number of shares we have, 3,531.07 equals $1,638 this month. All right, so they gave us $1,638 on our $54,000. So let's come in here, and we're going to come down to Tesla. And what was the date that they gave us that money? We'll put that in there too. March 20th. All right, so January, February, March. That's 03. What did I say? Short-term memory. 20th, 20-20, 2025. All right, and they gave us $1,638.41. Actually, 42 cents. Well, that's not as good as they've given us in the past. Look at that as it came down. So in January, we got 2,500 on our 50,000. And then they gave us 2,000 on our 219. That was 220. I don't think we got it in time. I don't know. Remember if we did. We only got $2,000 though. And then this time we got even more money. So we got 54,000 and we got less money, $1,600. Well, Tesla's starting to go up again, right? So maybe next month we'll get a much better premium. Well, maybe we'll get back up into the $2,000 or $2,500 marker. All right. So that's it. That's what they gave us. Now, as we put our money in there, this Tesla is coming in here. And it doesn't add up into here because we haven't bought more. It just comes up and, well, it does. It shows how that we've given us that seed money received. So it comes in here, 6,000. See that 6,214 comes from this number right here. Let me see if I can bring me down, see if I can make that a little bigger for you guys. Sometimes I get in the way, though. If I get in the way, say something. So you say, get out of the way, Land. Get out of the way. I can't see. All right, so see that number right there? This is the payments received column. And you can see right there, 6,214 just comes from a total of what we've been receiving here. Now, I also like to keep it by month. So I got a little table over here, and you can see Tesla. I'm going to take that, and I'm just going to say we're going to go equals, and we're going to put that number $1,600 over there. So now you can see that we've received, from the month of March, we've received all of our dividends. We've made $5,000 this month in dividends. Not as good as last month. We made $7,400 last month. But this is, we all know that this has been a crappy month in the markets. And these have not been dividends. Remember, these are not dividends. These guys are trading options for us. We give them our money, and then they go trade options for us. And so they can only do is, they're not bad trading. I mean, they still made $5,000 on our $161,000 investment. That's not bad return, right? So that's $5,000 that we made this month. Okay, and I don't think we have anything else left this month that we need to get money on. We probably do, because they do weeklies, because those are all our monthlies. And why did we only get 8 cents? Oh, because it's a tiny investment. So Misty, Tesla. So we have $5,000. We took 4,500 out. We got to have a column for this. We took 4,500 on February 19th and added it to Tesla. So we need to have a balance somewhere of cash balance. I got to figure that out. I haven't done that yet. So we took 4,500 and we got a little bit more. Oh, we took that out on February 19th. Well, that was February. We took it out of here. Well, this is all of March. So we still got another $5,000 plus however much is left over from here. We didn't take the full 7,000 out. So we got over $5,000, $6,000. Let's say we got $5,000 we could reinvest back into something. What do we want to put it into? Let's go see first before we start talking about where we're going to spend our money, because we got grandma's money over here we borrowed. We borrowed $47,000 from grandma, and we got to pay her back. We made one payment to grandma. So sold some options and paid back grandma some money. All right, we got to pay grandma some money. So we may give her $1,000. Well, let's go do that in a minute. But let's go see if we got YMAG. YMAG should have given us some money too, because it pays out weekly. YMAG. Are you guys doing this? I hope you guys are doing this. Let's go see when the last time was we took a payment for YMAG. YMAG, we took a payment on 3/13. So when was that? This one? Yeah, 3/13. So we got one payment. So let's come in here and put that into our calculator. 0.08, not very good. 0.085. Let's go see how many shares we got of YMAG. How many shares? We got 2,600. So times 2,630.19 equals. So we're going to give us $223. It's better than a what in the eye? Stick. Better than a stick in the eye. 200. Look, we usually been getting 300. We only got 200. Well, look at that one. We only got 100 there. We're doing better this month than we did back then. All right, so let's come in here. What was the date? March 20th. 03/20/25. Let's see, 2025. And that is $223.56. Lan, you're going to run out of room here. What are you going to do? I'll show you. I got a little trick. I got a little Excel trick that I will do once I run out of space for this. I got a little Excel trick. So $223. So what we have to do is come over here, and in March we got to add $223 to here. So this is summing those to 32. It's probably already in there. Nope, it's not. Oh, I'm not that smart. Okay, so we got to come over here and we got to go sum of the marches. Oh, we got one more March that we can get. And that's this here. $1,000 we've made this month. Can't complain about that. We made $1,000 on our $50,000 investment. That's not bad. I mean, we need to have the percentages in there, but I haven't got it right now. I'll put that in. We got to put that in. I'm going to put it right here, I think. Okay, so now we got all our money. MSFO. We know that we've already got our money for that one in March. So MSFO. Yeah, see, we already got paid on that one. That was our March, 28 cents per share. All right, so let's go back over to our spreadsheet, and we got to settle out some money. So let's come in here, and we're going to take, how much are we going to spend? Let's take, we got a little bit more. I got to figure out how much we actually have, because I don't know if we took any of this 7,000 out. All we took out is 4,000, and we got all that money sitting there minus 4,000. So that's I think, I don't know, because I think we put some more money into Tesla, and I'm not sure where we got that money from. It doesn't say. I'm not keeping very good track of the money we're taking out, only the money we're making. I got to do better. Took out 4,000 and add it to Tesla. Okay, this time we took out $1,000 and gave it back to grandma. So we're paying off our loan. So if you go and borrow money to do this, you got to pay your loan back. All right, and we borrowed $50,000 from grandma. And how come that's weird? All right. So we borrowed $50,000 from grandma, and we got to pay her back. So here's $1,000. We're going to take this, and we're going to make a payment. I haven't made any deposits. We'll bring this way down here. I'm going to put it down here. So we give grandma some money. All right. Minus $1,000 to grandma. Oh, how come that didn't work? Counting percentage. Oh, got to make that accounting. Oh, this is $10. Grandma wants more than $10. Okay, we gave grandma $1,000. So this is 50,000 plus a 30, and we'll do plus a 31. Okay, so that's the new total for grandma. We now only owe her 46,000. How's that? So we're paying grandma down. She's happy with $1,000. It'll take us 50 months to pay grandma back at $1,000 a month. But that's all right. We get the rest. Grandma doesn't know. Okay, grandma's happy with 1,000. That leaves us with 4,000 out of this. Plus, we only took 4,500 out of that one, and we didn't take any out of that one. I don't think. So let's take another. I'm going to take another 5,000. We're going to take 5,000. What's the next thing coming up that can pay us some money? What's our next rotation? Our next rotation is going to be Microsoft, but Microsoft, I don't know why we started doing Microsoft. Misty is, what's the dates on these things when they pay us off? Misty pays on the 13th. Tesla pays on the 20th. Microsoft pays on the 6th. I guess we could put some more money into Microsoft. What's the yield on Microsoft? Holly wanted me to put more money into Misty, but Misty is, we got enough in Misty. Misty's aggressive. Tesla. Let's go into where, oh, we don't even, oh, there's Misty down there, 163%. We got 56,000. Wait a second. This is borrowed money from grandma's brown paper bag. We later invested from our options trading. Oh, we took money from options. We haven't got any money over in our options trading right now to put any in there. So we didn't take that out of our, so we put 6,000 in from options, but we did not take any of this money. So this money we still have a good 5. We got 7. We took 4. We'd have to add this up. 5,000 out of that. That's 5,000. We still got $14,000 over here that we haven't invested. Is that what we've got over there? I don't have it up listed in cash. This cash field is from there. We got about $14,000 sitting on the sidelines. Because this said we put 6,000 from options trading. And this one we said down here, it says right there, we took 4,500 and put it into Tesla. I got to do a better job of tracking this. Investment seed money. So that's into, I say we get a little bit more aggressive here. What's our next payoff? See, we got day 5. And in our calendar, what's the next? So today is the 24th. So the next payoff is NVIDIA. And then, oh, these are not in order. And then we got the 12th, which is Microsoft. And then we got Tesla, which is not clear until the 27th. And then this is 19th for Misty. I don't want to put any more in Misty right now. Where should we put some money? We got to invest some more so we can make more. Invest more, make more. We could go spend some. We haven't spent any. We should go take our, didn't we spend some once? I thought we went and spent some. Oh, look down here. We did spend some. Oh, these are things we want to buy. Oh, wife present. We took 500 out for her. Land's Pheasant Ranch for you guys that want to come to the Pheasant Ranch. That we took 1,100. Arthur's coming to the ranch too. No, he's not. He decided not to come, so we can't take that out. Ben hunting fee. Yeah, Ben's coming and Ben's airline. Ben's coming, and we need a 4-wheeler. We need to buy a new 4-wheeler. This 4-wheeler I got my eye on, 70,000. We got a Harley motorcycle we need to buy. That's 20,000. We need the new Tesla Y model. Let's do that. Let's buy as a Tesla Y. The problem with that is we got to make payments every month. And we haven't bought the wife a present. Let's increase this. So we got to buy the wife a present. So we got to go plus 500. So now we've taken, oh, we got to do equal sign. Are you guys buying your wife's presents? You got to do that, you know. It's part of the game. You got to play the game right. It's called the game of life. And you always have to buy the wife a present. If you don't, you lose the game of life. It's true. It's true. You might want to buy her a Model Y. We have to buy my wife a Tesla with full self-driving because she doesn't drive. She doesn't drive. I'll get her a driver's license, but then she can only drive the Tesla. It's a drive by itself. Glad she can't hear me. Okay. Motorcycle, Harley, that's for me. This is for her. All right, we're going to buy a Tesla, 500. All right, so we just bought ourselves a Tesla Y. Now, we have to put down more than that. It's a $2,500 down payment. Plus, when you buy a Tesla, how do I know? Ask me how I know. I've been looking. So we bought a Tesla, $2,500 down payment. Plus, we have a $250 order fee. And then our first month's payment is $500. All right, so there's our $3,250 to get into our Tesla. So we now have a Tesla. Accounting short. Where's accounting? Accounting, currency, accounting. Okay. So that's to get us into our Tesla. And now we get to drive our Tesla Model Y. And there we go. Let's see. So we spent 3,000 there plus 500 there. We have 14,000. So let's put another 5,000. So we took, let's say we took, how much do we take out? We took out 500 for wifey, and we took out 3,250 for Tesla. We took out 3,250 to buy our Tesla Model Y. Now, don't you guys go key it. None of you guys. And don't Molotov cocktail my new Tesla. All right. And we came down here, we took out we took out $100 for wifey gift. So we can win the game of life. That's for winning the game of life. All right, $500 to the wifey present. We bought her a new Tesla. It's all about keeping the wife happy, right? And then we took $1,000 out and gave it to grandma. Are you guys doing this? Are you guys spending your money? And then we took something's screwed up. And this is, I gotta put a dollar sign in there. That's my anal retentive side coming out. We took 4,000 on February 19th, added to Tesla. Now I think we can take 5,000 out. We're going to take 5,000 out. And we're going to take 5,000 to, and what did we decide we're going to put it into? I want to put it into, I really want to put it into NVIDIA. I like NVIDIA better than Microsoft. Why did we put any in Microsoft? That was dumb. All right. NVIDIA. We're going to put on, what's today's date? 3/24/25. We're going to put $5,000. Okay. So we're going to come down to NVIDIA and we're going to say 3/24/2025, 5,000. And so 5,000 seed money equals this. Boom, just like that. We've now got $5,000 into NVIDIA and we're going to get paid on day 5, which is not too far away. Today's the 24th. So that'll be next week. So we easily hit the ex-dividend date. So we'll have our $5,000 in there and we'll get paid next week on this one, or the end of next week. So probably a Monday or two from now, a couple Mondays from now. All right, so that's good. Took $5,000 out. I don't think there's anything else I'm missing. I'm sure I'm probably missing something. I need to come spend some time and set up some of these tables on cash, and I need to get this figured out over here. 5,000 to NVDY on 3/24/2025. I'll figure that out. We'll make a nicer, prettier table for this. Totals and all that good stuff. All right. All right. We got all of our money that we can get for this month. 5,000 on a $166,000 investment. We got 5,000 more coming in. Is that total? Yep, it's in there. Payments received. We haven't received any payments yet. Did we receive one on Microsoft, or did we already look at that? Microsoft. Where's MSFT? MSFO. Right there. 3.6. Yeah, it only pays once a month, right? We already did MSFO. Did we already come and look? MSFO. Yeah, we did. March 6th. We got our $8. Oh well, $8. Yeah, buys you a McDonald's hamburger. There you go. All right, I think we've done everything we can do over here in this spreadsheet. Are you guys following along with your spreadsheet? If you want this spreadsheet so you can do what I'm doing and keep track of your money. Now, this is your seed money, how much we got in there. These are the payments that they've paid us. So this is money that we've received, and it's coming from these tables down here. If we put more seed money in, we put it down here. If we get dividends, we get them in here. And then these numbers and totals just go up here into these spreadsheets. And then the payments we've received so far, so seed money we put in, $166,000. So far since January 1st, we've made $20,000. That's pretty good money. That's the first quarter. So if we do 20,000 times 4, that's $80,000 on a $166,000 investment. That's not bad. I mean, some people could retire on that. I don't know if you could. Some people could, though, I would say. And remaining seed owned. That's 166,000. It's made us 20,000 so far. You can't spit at that. How much remaining seed owed? This is how long they owe us 140,000 back. Once they give us all our 140,000 back, we'll be cash cow. We'll have all of our 166 investment back. And how long is that going to take? Well, according to our numbers here, we'll be on the gravy train in 13 months. That's like 1 year. In 1 year, they'll have given us our entire money back and we'll be on the gravy train. All right. So these will all become cash cows, become the gravy train. Payback's years left, 1.12 years. So pretty darn cool, right? Paid back so far, 12%. That's a 12% return on our investment in 3 months. Most people will wait, you go down to Cash Valley Bank. Most people would wait 3, 6, 9, 12, 4 years. 4 years to get that kind of money. We got it. We got it in 3 months. All right. Weekly income, we estimate 2,700. Monthly income, we estimate 10,000. That's a little bit aggressive. We got that. We haven't been meeting that. This is just a calculator that calculates your estimated. So that means we have to update our tables because their market's not been this good. So our estimates are a little bit high. So we were estimating that we were going to get 10,000 a month, and we're only averaging 14, 15, whatever that is divided by 3. So we're a little bit shy on that. So 10,000, but we only got 7,000, then 7,000, then 5,000. So that changes. The annual, we expect 130,000 or 78% annualized return. But we're not quite making that. Market's not performing as well as we had hoped. So our little calculator is a little off. So how are we going to fix that calculator? Well, we got to come over here and we'll go in and look at our dividends, most recent dividends, and we'll update that table, and then that'll change our yield, which will change our calculator. So I can do that. We don't need to have you guys sit here and watch me do that. And then this is our equity in the business. All right. There we go. So equity is a little bit down, but we don't care. It'll come back. Not worried about it because we're getting our gravy train over here. All right. All right. That's good. Let's go and save that. And we'll close that out. Anybody have any questions about this? You'd better hope your wife doesn't watch this episode. Yes, I told her I'm gonna get her a Tesla so that she can drive. Because she can't drive. That's why. All right, that's good. We got rid of that. Okay, let's come back over to our portfolio. We'll just go down through this real quick. All right. So we are at an X2SA1 here on Apple. We have already talked about that. Let's put these in here. X2S/A1. It's got the same pattern as the other one. I'm sorry, that's X2S/A1. And that is actually X1S. X1SA1. Low probability of success. But it kind of got that funny little thing right there where we thought that was X1S because it broke the blue lights. So then we thought right here, see, that becomes, technically speaking, that becomes an A2, but it was an A2 fail. A2 fail. And then that comes in and we're gonna call it what it is. All right. We're gonna call it. Let's get rid of this one. We're gonna call this break right here. This is gonna be an X2SA1. I don't really want to call that an X2SA1. I almost want to call that a new X1SA1 because this is like a full reset, but it's an X2SA1. That's what it is. All right. So this is going to be a 50% probability that this will rise from here. Is it worth putting money on? Yeah, it is. Put a little bit in there. Don't back the truck up, and everything looks good down here. It's all in the accumulation stage. So our indicators are all set up and we got the green light right there. So on the MACD, the big banks are going through the accumulation stage. This was their first accumulation. This is their second. They could go to a third, but right now we got a 50-50 chance that they're not going to do that. And You see, we went from green right here. Now we're going from red to green. So that is our signal. Buy, buy, buy. Put some money into Apple if you want to. Don't back the truck up though, because there's the possibility of that X3SA1, and that would be down here. If we come in here and put our little projection, our Fibonacci dillywicker in there, we can say let's say it just goes back to 50%. So it goes up to there, and it's kind of going along that trajectory. Let's say about like this. It might go a little faster. Who knows? Who knows? And then it comes back. Let's say it pops up there and then flushes one more time. We would expect it to be somewhere down in this region here. And given the scope of how it dropped last time, and if we got just a 50% retracement back into that delta cone of probability, and then it flushed one more time, we would expect it to be down in here. You know, it could be the 78. We'll give it a lot of variation in there. It's like right in there somewhere. And that would be out there somewhere by end of April. Now, is it going to do that? We don't know. But I keep pulling up this monthly chart and showing you that the monthly chart is barely pulling back. We got this thing's got to come all the way down to 482 just to set up a perfect Fibonacci bow tie. Now, is it going to do that? I don't know. We could get one of these little things right here, and that could all we get right there. All right. Don't know. Won't know until it happens. But I think we got some downside potential on this thing with the S&P. And it's just way too high. Big bubbles are popping. But could it go up? I don't know. That's the odds. I keep telling you, the short-term trades are saying, buy me, buy me, buy me. The long ones like, stay out. Don't invest your money yet. But I don't know. You're going to have to choose yourself because I can't tell you what it's going to do. All I can do is show you the mathematical models, and then you're going to have to make your own decisions. I put a little back in, all right, but I didn't back the farm up. All right, I didn't sell the farm, but I am putting a little bit in. This is Amazon. I'm not putting any in Amazon. This X1SA1 it's only got a 50% chance of reversal, but it is Amazon, and Amazon, one hell of a company, right? And it could be a V recovery. Who knows? Or it could just make a little ABC like that and just keep right on going. And it could be the turnaround point. But it is an X1SA1, which means it only got a 50% chance of being right. That's not 50, 25%. 25% chance of being right. We don't know. We don't know till it happens. Google, same thing. This is another X1SA1. X1S/A1. 25%. But it's a long X1SA1. Have to give it credit for that. Mags, that's the mags. That's all 7 of them, all going in at one time. X2SA1. We got an X1SA1 up here. Broke the blue lights. Come down to mathematical models. These are the models they use. All right. So reverse engineering. What does it look like? Well, look at your indicators. They've been going through accumulation, and our retail indicators are saying turn, 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 go, go, go. You're going to buy some down here and sell off as it goes up like they do? Or are you going to buy all the way up trying to build yourself an upside down pyramid? What are you going to do? Same thing on Meta. Meta. All right. It is what it is. Label it. Stick it on there. X1S/A1. 25% chance of being right that thing's going to go up without breaking down and creating a new low again. Where are you getting these numbers, Land? What's the next one, SA1? I'm glad you asked. I'll tell you. You can go over to my book. And it's a mathematical model. It's called the Wyckoff Accumulation Distribution Model. And then also, this is the Elliott wave pattern in that accumulation system. So if you want to learn how this all works and where you get your probabilities, it's like playing blackjack and you get one of your little probability cards. And you have a probability card for the stock market, just like you do for blackjack. And if you don't know what the probabilities are, you have no business playing blackjack, and you have also no business trading the financial markets. If you don't know the probabilities, don't trade. Comes down to that. Where do I get those probabilities, Land? Out of my book. I get it in my book. 238 pages on Amazon. Go get it, and you can have the probability tables too. All right, there you go. And let's go. That's Meta. And we do have a straddle on here. And I was going to go talk about, let's just go down here a little bit and we'll talk about, um, oh, this one here is a frustrating one. Why is that one frustrating to me? Well, because it broke the blue lights up here and then flushed immediately. And then it created a nice little, nice. It created an ugly little head and shoulders formation in here. That's what it's working on right there. Little head and shoulders formation. And it's just an ugly one. And if this fails, we take this whole thing and move it over, right? That's how we do that. But right now it's sitting right here with this ugly little head and shoulders bottom formation. And breaking above the neckline is the buy signal. So we would look for it to come back and create that little right shoulder, not break the head. If it does, then we have to throw the whole thing out and then continue higher. The problem is that little break right there really frustrates me. Why? Because it gives you an X3SA1 and it's the ugliest little thing you ever did see. This becomes an X1S/A1. This becomes, it is what it is. You have to call it, guys. X2S/A1. That's why I hate it. Because it doesn't look like an X2SA1 to me. Not a very good one. That makes this X3SA1. An X3SA1 has a 75% chance of success. But I don't like that because I don't like that one being the X2SA1. I want this one to be X2SA1 down here because all the rest of the market is X2SA1. This only has a 50% chance of being right. This one only has a 25% chance of being right. Right? If you want to go with percentages. So you have a 25% chance that's going to be the turnaround point. Didn't happen. That's 50% chance of being the turnaround point with one little break. Didn't happen. That's X3SA1, 75% chance of being right. I don't like that. This should not have broke those blue lights, and that should be our X2SA1, and with only a 50% chance of reversal. That's what I'm saying. That's what I'm saying. So you could all come in here and call this is fail. This is fail, right? If you want to call it fail. We don't really call it fail because it didn't really fail. It was what it was. So I don't generally call it fail unless it fails after it starts to supposed to rally. So drive 1, drive 2, drive 3, drive 4. So Microsoft had 4 drives, but it was really ugly. So that's an X4. It is what it is. That's an X4 right there. X4 / A1S, right? X. This is just a B1, B1S, right? You guys are right along with me. You know what I'm doing here. Just counting this out for you. And that makes this one down here a C1, which ugly C1S. That's a C1S right there. I don't know. I don't know if I like that. That's what it is. I don't know if I want to back the truck up on that 75% X3SA1. That's all I'm trying to tell you. I don't really like it, but it could. I mean, it is what it is. It is what it is, guys. There you go. NVIDIA. We already did that one. We're on X2SA1. NVIDIA. That's NVIDIA. This is NVIDIA. We don't see ya. Bye. All right. And then with Palantir. Palantir. Now, the thing about Palantir, this is another frustrating one because you want to call this the top. And so that means this here is X. What is it? X1S A1. 25%. It only has a 25% chance of being the one that rallies. But Palantir is so strong. This may be the stock that goes. See, drive 1, drive 2, drive 3. This is the ABC pattern off the back side. A, B, C. We should get this thing down into here. We're going to go give it a little wide berth down in here. And that would be at least coming down and testing that 200 period moving average, which is right here. But we got a 25% chance this could be the turnaround point, and it could just take off and go to the moon. Now, this is one of these amazing stocks that could break all the rules. Who knows? Who knows? The problem is that our accumulation zone is here. And so this is really setting up for a failure and a fall back down. And you can see that this pullback in here went green clear back here. Did you put any money into Palantir? I did. I put it into PLTY though. And I'll take the dividends and put it into PLTR. I have some PLTR because I've been putting my dividends into it. But not backing the truck up, just taking the dividends and putting it in there. We're up $197 on this one. 520 on the long call, 322 on the short. All right. This really looks like it wants to, even with this, looks like it wants to turn and flush one more time. Is it going to? I don't know. I don't know. Do you? Nobody knows. Nobody knows but BlackRock. BlackRock knows. Do you think they don't know? You bet they know. All right, let's come down to Tesla. We looked at Tesla, but we didn't label it. Let's label it real quick here. This is an X1S/A1. That is a 25% probability of going up from there. And it didn't do it. And then it went way down here. Oh, my goodness. Had a beautiful little shelf right in there. Look at that little baby right there. Just like a train on rails. And then it came in here. And this one is X2S A1. 50% chance of being the bottom. And it's below the 200 period moving average. So we thought it might come down, hit that 200 period, go through this little sideways thing. So it just had a little bit extra and then go from there. Now, usually if you're following the Darvas boxes and you're following the Elliott wave patterns, the X2SA1, where we have 50% chance of being right, that is the bottom. All right. So you go with your 3-drive pattern. So you go with your 3-drive pattern. So we got one, we're going to call this one here. But see, this thing is like a reset right there. We got 2 drives on this. And that's the sad thing right there. We only got 2 drives up. But you might want to call that, we're going to have to, hindsight's 2020. You're going to have to call that the 3rd drive if you want it to make a 3-drive pattern. But it doesn't necessarily have to be a 3-drive pattern. It just got 2 drives. 2 nice, big, beautiful drives right in here. And then it's got 2 drives down. So we didn't get our 3rd drive unless you want to go back here and count that. And I really don't. We could just count that one. But then that would have to count that one. That's 4 drives. So we can say we got 4 drives. Last 2 were just amazing. But those last 2 big drives. But that doesn't help us out here. And it's a big rally. Look at that. Man, that thing is taking off like a rocket ship. Elon did have a big meeting where he went and talked to his shareholders. Did you listen? Are you a shareholder of Tesla? Again, I didn't put my money into Tesla. I do have some Tesla. I put it into TSLY, because that gives me the monthly dividends. So if you look at the TSLY, you got 3 drives. Whoop, just like that. Whoop, just like that. 3 drives down. And when we have 3 drives down, remember, that's an X3S/A1 with a 75% chance that baby's going to rock and roll and go back up from there. But I don't generally like to do my Fibonacci calculations based on the TSLY because this is just a bucket of money that's trading the TSLA. That's all it's doing. So this is really the one we want to be paying attention to. But again, back to our Darvis box. So where did our Darvis? We're going to go with 3 drives. And our Darvis box ends right there. That's the end of Darvis box. And believe it or not, Tesla, as bad as everyone says it is, never left the Darvis box, which is pretty amazing. And even if we come in here and just do the last 2 drives right there, it never closed out of the Darvis box. So let's do that because it came right down and touched the bottom of the Darvis box. And now it's starting to rally back up again. So if you pay attention to things like that, that can help you be a better trader. And I know everybody's like whining and bawling and saying, oh, I can't believe that Tesla fell that far. But it never left the Darvis box. So, I mean, it went to the very bottom of it. And it didn't even go to the bottom of the 3 drive pattern. Because if we go take that 3rd drive back, it's back here. Not much difference, but a little bit different. I mean, that's your actual Darvis box right there, the last 3 drive pattern. But since that first drive was so wimpy, we could just go to here. And even there, even with the last 2 drives, it didn't make it out the Darvis box. So it broke that last double drive down. That's your end of your Darvis box. And our next Darvis box starts right here. And we usually like to see, obviously, we like to see the Darvis box start up here a little higher, around at least the 50% level. That's where we like to see it come back. But it could come back to 61.8. This one came back to 100. Yes, they're spanking Elon. Elon, we're going to spank you. All right. So now what I like to do is just project how big this 3 drive pattern was. So if we come back and we say, well, this is how long this 3 drive pattern was and how tall it was, how big it was. We just take this one and put it out here and start the new Darvis box right there. And that, my friends, is where it shows that Tesla is going to be over the next. Past performance is not necessarily indicative of future results, but it's the best we got. There you go. That's the next Darvis box for Tesla. Now, could it turn and flush and come back down and they spank Elon again? They certainly could. BlackRock, Vanguard, State Street could get together and they could spank Tesla one more time. All right. They could spank Elon if they wanted to. It's just whether they want to or not. And we'll have to wait and see because remember, they have all the money in the world and they can do whatever they want. The only money they don't have is what's in your pocket, and they want that too. And they're mad at Elon right now. So they're spanking him a little bit, I think. And they could bring it back down here. This is an X2 SA1. So they could bring it down to an X3 SA1, and then your Darvis box would have to go out the window. But for now, we're going to stick that to the Darvis box right there. All right, we'll leave that there. All right, now let's come back over, and we got to go to, let's go to a stock that's not in the Magnificent Seven. Let's pull up Caterpillar. And we're going to look as if we want to get into Caterpillar. All right, so Caterpillar is coming down almost off of a 3 drive pattern. This is a little A top, B top formation, right? Just like that, just like that. All right, that's a 3 drive pattern, drive 1, drive 2, drive 3. And so as I say, the daily charts are screaming at us to buy, buy, buy. The long-term charts are telling, stay out, stay out, stay out. But what if we wanted to buy this market off this little 3 drive pattern? We could come down here and that market is starting to flush, breaking right now. That would be, if we kind of come in here and label it, it'd be an X3S/A1. So you want to buy some Caterpillar. All right, let's do it with an option. So we're going to come in here to our options table. And I'm going to come into just the calls. All right, for now, we're just going to look at the calls. And what we're going to look at is we're going to look at the premium, which right now at the money is $397. Now, out of the money are all these up here, right? Now, we got to remember, we talked about delta. So this is out of the money, or this is at the money, $397.50 for one call. Oh, that's only 4 days. Let's do, should we do a Fibonacci projection off the top? We'll go from here to here to here. Oh, that's the down projection. We want to do an up projection. Well, let's do, you know what? I don't know if we're going to get, we might. Look at that thing saying That's our little bottom formation. That thing says straight up like this. Whoop, it'll go straight up. It might. That's what it's done in the last two times. Look at this. Same here. Went down, whoop, straight up, and then whoop, straight back down. 130.9, right down to the golden ratio. Just like a train on rails. You can't make this stuff up. You can't make this up. You couldn't make it work any better if it worked like if you drew it yourself. These markets follow these models just like, holy cow, if this doesn't just blow your mind, nothing else will. Okay. X3SA1. That baby is saying back the truck up. Sell the farm, man. Put it into Caterpillar. That's what it's saying on the short-term chart. Now, you can see we're leaving the accumulation zone. They've been accumulating. The flip over happened all the way back here, but it's giving you a reprieve. If you want to get into this baby right now, we're going to go out 100 days. All right, I'm going to give ourselves a little bit of time in here. Let's go out to the 116s and see where the volume's at. Ooh, people are buying the out of the monies. They're not even doing it today, though. 116, let's go to 88. Ooh, we're not getting any volume open interest out here. Ooh, this is hurting. Oh, that's painful. What about 144? Nobody's buying anything. Let's look at the short day. Not that one. Let's 32 days. Nobody's there. Where is everybody? They're all over looking at Tesla. Nobody's out here. 116. 144. I'm looking at the volume and open interest. Remember, our rule of thumb is that we want volume to be 100, our open interest to be 1,000. Now, again, that's just a rule of thumb. What we're really looking at is how wide that spread is and how expensive it is. So if we wanted to do this 170-day option, look, we'd have to pay $120 on the spread. I ain't paying no $120 for the spread. So that's how you look at the volume and open interest and know the volume and open interest is going to tell you what that spread is. 242. Look at the spread. $200. 298. $85. And look at the look at this. That's why these spreads are so expensive. The premium is $2,300 and it's worth $2,500. Wow, look at that. This is the theoretical value is your Kelley Blue Book of options. It's like going to a used car dealer and looking up the number of seeing what the car's value. You don't ever want to buy a used car, right? Unless you look at the ADA book or the Kelley Blue Book, see what the thing's valued at. So you know whether you're getting a bargain or a deal or you're paying too much or paying too little. That's what the theoretical value is. This is the Black and Scholes number telling you what those options are valued at. And right now they're valued at $2,900 and you can buy them for $2,600. That's $300. And that's why your spread is so expensive. And that looks like the best one right there. The spread's only $55 with a delta of 59. We're getting something that's worth $2,900 for $2,600. 144. That's 75 on the spread. 144 is 55 on the spread. 2,900. I don't like paying that much on the spread. We could come up here. Look, there's zero volume. Absolutely zero. 116. At least there's some people trading it today. Looks like they're buying, mostly they're buying the little bit out of the money. $25 on the spread. That's probably the best one if we wanted to get into Caterpillar. Buy a little out of the money spread right there. We could do that. What are the puts? If you come down here and, oh, nobody's buying puts. Can you blame them? Okay. Well, it is what it is. That's how you do it. Okay, we're going to come in here and we're going to come in and they're asking 1390. Now we're going to have to go to 1390 because we're in the demo account. They're not going to let us bid for it and get anything less. So we'll go to 1390, place that order. And so we just bought ourselves a call and we paid $25 in spread. All right. And we're a little bit out of the money. And the reason I did that is to get up here where there was some volume and open interest. I really like to generally buy at the money. Now there's 1,000 of them down here, but that was when there's no volume. That wasn't today. That was probably when the market was trading down there. Those guys bought those. They were a little smarter. They're in a little bit earlier. Where is that? Ooh, that was way down here. So they're buying the in the money. Oh, you know what I'll bet you what they're doing with that one. Poor man's covered call. They're going to do a synthetic long on Caterpillar. That's what that is. They're buying the deep in the money call. Look, that's got a delta of 80. Yep, that's exactly what they're doing. That is being set up to now come in here. They're going to buy that and they're going to sell some premium against it and start collecting premium. They're on the X3SA1. They know that's what's happening. That's exactly what's happening. We could do that too. But then we'd have to sell calls instead of buy calls. They're going to just collect premium. They don't know how fast the Caterpillar is going to go up, but they don't think it's going to go down to there. It's actually below that line right there. See that? That's how they've done that. That's exactly why those 1,000 shares are in there. You can reverse engineer these people's thinking by looking at what they're doing. This is a delta 80, which is very typical. You're going to buy the in the money market. Now, they didn't do it today. They did it the other day, but they got 1,000 shares sitting out there. There are 1,000 options plus 57. I don't know if that was all the same people, but they paid $5,000, probably a little less than that a couple of days ago, maybe a little more. Anyway, they got themselves some. They might just be doing a poor man's covered call, or they could do some synthetic longs. They by selling some puts down here, and then they could sell some calls up here and collect the premium. Let's see what the calls would be, a little short calls. If we do, the problem is there's nobody trading them. I don't know why you'd want to do that. They're not doing calls. They're just buying deep in the monies because you can't sell. Well, yeah, but nobody here. It's like walking into a dark room. Oh, there they are right there. They found them at the 24 days. Look at that. 1,357. And if you go to there were 116s. 1,057. 1,057 on the 16s. You go to the 24 day, was it 24 day? 1,057. 1,357. It's too close. It's the same people. It's got to be. They've done 125 of them today. That would probably be take 125 off that. I'll bet you that's the same damn group of people right there. It's too common, too similar. And what they're doing is that's their calls that they're selling. I had to pay $25 to get that. But if they sold 1,000 of those, so they bought 1,000, they sold 1,000. That's what they've done. They've reverse engineered it. Let's do it. Let's put it on like they did. Let's get rid of this just for fun. All right. All right. So this is what they've done. They come in here and let's just say they're doing 1,000 of them. Oh, we can't do 1,000 of them, but let's just for fun. Let's see how many we can do. Let's come in here. We're going to go to 144s. It wasn't 144s. It was 116s. And we're going to buy. Let's just do 10 of them. Can we do 10 of them? 5? Yeah, we'll just do 1. Heck, we'll just copy them 1. All right. We got a small account, 100,000. So we'll just come in here and we'll go, let's just buy that. We could do it all on the same ticket. We can come in here and then we go to our 24 and we're going to come up here and we're going to sell one of these. So we're going to buy one down here. We're going to sell one right here. And they're going to collect the premium on that thing. And they're only doing 24 days. That didn't go out very far. Well, they want to receive $557. All right, let's mark it into that and see what happens. We're going to pay $4,560 for the 116 day, and then we're going to take it off at 24 days. We're going to get a 9.65% return. So place that order. And we're going to do exactly what they did. All right, just for fun. Okay, so that's a poor man's covered call. So they're going to collect $550. You can see on the premium that they sold on that one, plus whatever the market moves from where they bought it. It looks like they bought it a couple of days ago. They might have bought, let's say yesterday. So they bought it a little lower than we did. So they're going to go, we're going to make, so you can say with just one, well, they're not going to make that full amount because they got 144 days, but they're going to put another one on. So they'll make, if that just thing goes up for us, it's going to go up. We'll make $800 on the long call, and we'll make $550 on the short put or the short call. So that's a poor man's covered call, and that'll make you about $1,000 right there. And they did 1,000 of them, so that's a big company, and they just made 1,000 on each one. So $1,000 times 1,000. How much is that? 1,000 times 1,000, that's $1 million. 1,000 times 1,000, that's $1 million. That guy will make whoever did that's going to make $1 million in 24 days. If the market goes up above that red line. If it goes above that red line, he'll make $1 million. They'll make $1 million if it just goes above the red line. It's that purple line over the red line. That's $1 million. Pretty cool, right? Okay. All right, guys, we've been having fun. That's what we did. We looked at delta. We looked at theoretical value. We looked at the premium. We put on a nice little poor man's covered call. Watched a guy make $1 million in 24 days. And what if it flushes land? What if it goes down? Well, then he'll only make $500,000. Poor sucker. It's only going to make $500,000 if it goes down. What if it goes down below his, max amount of money he can lose is the $1 million that he put into it. But he's at an X3SA1. He's got a 75% chance that thing's going to go up. And that's what he's betting on. He's betting that the market's going to be above that red line by the purple line. He'll make $1 million. All right. Whether it's one guy or I doubt it's one guy. It's got to be a whole company. It's got to be a company, a hedge fund. All right, guys, I guess that's all I got for you. The only thing I want you to remember is just remember, there's fake people out there faking who I am. I want you to not fall for that, okay? Where is that little notification in there? Is that it? No, that's not it. There it is. Please, I will never, all right, move me over here. I will never call you on the phone, send you an email or private message you asking you to invest, trade, or send me money. I do not trade other people's money for them. I will never ask you to send me money so I can trade it or invest it for you. I will never contact you with a cryptocurrency trade recommendation. Fraud alert. They're pretending to be me. All right. They're imitators. They're intimidators. They're imitator intimidators. All right. The scammers have discovered me. Beware. Fraud alert. Don't fall for it. I had a niece and a nephew both fall for it. Plus, I had a student call in the other day, yesterday actually, and said that I'm glad she called and checked in before she started sending them money. All right. So please don't fall for the frauds. And if you want the software I use, it's Track and Trade, trackandtrade.com. Download the stocks version. That's what we're using here. And futures version is what we'll practice with tomorrow at Power Hour, 1 o'clock tomorrow afternoon. Come and join me, Mountain Standard Time, and we will do a little day trading tomorrow. And if you have any other questions, please let me know. I'm always here to help. All right, guys, take care. We'll see you tomorrow.